I'm John Hanna for CDTV.net in New York, and we have Greg Womack, the president of Womack Investment Advisors, joining us from Edmond, Oklahoma. Good morning, Greg.
Good day, John. How are you?
Sounds like you're in great spirits. I'm okay,
Oh
and yourself?
man, we're pumped and primed and ready to go.
Okay. Where's the good spirits coming from?
Well, I think it's just after two solid weeks of volatility, I think hopefully we're ready for the markets to calm down. But who knows what this world's going to throw at us? We just
Right.
got to keep on our toes and have the best attitude we can.
That's a good thing. That's definitely a good thing to do. So, Greg, what do you have for us today at the Market Week report?
Well, the last week the equity markets managed to erase the previous week's losses, only to see those gains vanish once again over the rest of the week on discouraging economic news. So we saw, domestic equities decline the fourth straight week, and the small cap Russell 2000 has now corrected roughly 24% since July 7th. As you well know, an extended 20% decline is considered bear market territory. So the Russell 2000 small cap is down much more than the other indexes. Year to date, the Dow was finished off last week around 6.5%, the Nasdaq 11.7%, the S&P around 10.7%, the Russell 2000 roughly 17% down for the year. Global markets also suffered. The German DAX lost almost 10% for the week, partly because of the figures that showed, the stalling economic growth there. But Treasuries once again benefited from all the anxiety. Yields plummeted to really record lows on the 10-year Treasury that I've seen in decades, and just near historical lows. And the 30-year plummeted more than 30 basis points. And so gold shot up, yet another new record, ending around $18.50 an ounce. Now, John, as I'm speaking, as around noon Eastern time on this great day of August 21st, 2011, 22nd, August 22nd, we have a Dow is up 55 points, Nasdaq up 7 points, the S&P up roughly 3.5 points, and gold up, hitting a new record, up 35 points. All these were trading higher earlier in the morning, but have since tapered off some. As we kind of dig into last week's headlines, John, we look at some of the economic news here locally in America. They had the nation's industrial output rose about 0.9% in July, according to the Federal Reserve. We also had the estimates for May and June revised upwards. So roughly about 77.5% of the nation's industrial capacity was in use, which is about 2.2% more than last July. However, the flip side of that coin is the Federal Reserve survey of Philadelphia region manufacturers during the second week in August showed a 34-point drop. It was a negative 30.7 reading, and this is the survey's lowest level since March 2009, though many of the firms said they expect growth over the next 6 months. So you'll remember that March 2009 was not a very pretty, happy time around the economy and the markets, kind of the low point. So we're kind of dipping down as far as the manufacturing. Consumer prices rose about 0.5% in July, keeping the consumer inflation rate for the past year at 3.6%. Rebounding gas prices really accounted for over half the increase. According to the Bureau of Labor Statistics, higher food prices, especially dairy and fruit, were important in those figures. And inflation at the wholesale level rose 0.2% in July. But if you take out food and energy, the figure was 0.4%, marking the 8th straight monthly increase. So we're getting continued inflationary pressures. If we go overseas, the French president Sarkozy and the German Chancellor Merkel agreed to establish a council to oversee economic issues affecting the Eurozone. They proposed a tax on all financial transactions and a requirement that all member countries agree to balance their budgets by next summer. And meanwhile, the second quarter growth in both Germany and France was essentially flat. This was raising some concerns about their ongoing role as the linchpins of the EU economy. Back home, housing starts slipped 1.5% in July, according to the Commerce Department. However, starts of multifamily buildings rose 6.3% from June and were up 66.7% from a year ago. So single-family home starts were higher in July, but the existing sales of existing homes fell 3.5%. So we still have a lot of weakness in the residential markets, although apartments and multifamily buildings are experiencing a nice growth trend. And let's talk about ratings. Fitch reaffirmed its AAA rating for U.S. debt. However, the ratings agency said that it could change if economic recovery is weaker than expected, or if the committee charged with tackling this decision fails to reach an agreement. Speaking of ratings, the Standard & Poor's is reportedly under investigation by the Justice Department for allegedly improperly rating mortgage-backed securities prior to the 2008 financial crisis. So what we're seeing is these rating agencies starting to shape up how they're going about rating even the U.S. government debt because of the past sins and overlookings perhaps. If we look ahead, I think a lot of the eyes will be on the Chairman Ben Bernanke's speech Friday at this year's Economic Symposium in Jackson Hole, Wyoming. At last year's meeting, he signaled the possibility of a QE2, that's a quantitative easing, number 2. So there is speculation that there may be hints of a QE3 possibility. So all ears and eyes will be there. And also, if the initial estimate of the 1.3% growth in domestic product is substantially revised on Friday, estimates of the potential for a renewed recession could be affected. So that will be watched closely as well on Friday. So key dates and data this week: new home sales on the 23rd, durable good orders on the 24th, and of course the second estimate of second quarter gross domestic product on the 26th. Should be an interesting week, John. School's back and traders are back, and we'll see how this week shapes up and see if we can reduce the volatility in the markets, or do we still have angst around the corner?
That's Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma, and I'm John Hanna for CityTV.net in New York.